so I have 18 practice problems that I want to go through, and I will probably break them up into 2 videos. So this is going to be part 1 of 2. For chapter 9 practice. All right. And again, these are all multiple choice questions. So these should be very, very helpful for exam purposes. Okay. So first, individual proprietors report their business income and deductions on what? Okay. So we're talking about sole proprietors. Okay. And so that is Schedule C. And you will get to see that on your tax return project. All right. So number 2, according to the Internal Revenue Code, Section 162, deductible trade or business expenses must be which of the following? Well, this is simply verbiage from the code. And so you will know this very well. Ordinary and necessary. So in order for business expenses to be deductible, they have to be deemed both ordinary and necessary. All right, so number 3, which of the following expenditures is not likely to be allowed as a current deduction for a landscaping nursery business? All right, so the key here is current deduction. Okay, and so when we think about deductions, the alternative between deduction, we have deduction versus capitalization. And capitalization is when there is a long-term benefit expectation. Okay, and so let's take a look at each of these things. Cost of fertilizer, no, that is going to be a supply, and so that will be a current deduction. Accounting fees, all right, also a current deduction. Cost of uniforms, no long-term benefit per article, so a current deduction. A cash settlement for trade name infringement, also a current expense. The cost of a greenhouse gets capitalized, and the way it gets capitalized is via depreciation. Remember, depreciation is a form of cost recovery. All right, so that's number 3. Oops, gotta switch slides here. All right, so number 4, which of the following business expense deductions is most likely to be unreasonable in amount? Okay, so this is the other caveat with business expenses. Business expenses need to be ordinary and necessary, but they also need to be reasonable in amount. And you may be asking yourself, what the heck is reasonable? Well, that's a great question. The answer is it depends. The Internal Revenue Code literally says expenses need to be reasonable in amount. And typically the way reasonable gets defined is via the court system. Okay, so if we look at all of these scenarios, compensation, paid to a taxpayer's spouse in excess of salary payments to other employees. Okay, anytime you have a related party transaction, there is going to be increased scrutiny. Okay, so is this likely unreasonable? Yeah, it's likely that that could be determined to be unreasonable. Now, if your spouse is more qualified or more educated than any of your other employees or has some special skills, Are there situations where that could be reasonable? Yes, but we're talking about in general. Amounts paid to a subsidiary corporation for services where the amount in excess of the cost comparable services where the amount is in excess of the cost of comparable services by competing corporations. All right. Again, we are talking about a related party because this is a subsidiary corporation. All right. Anytime you have a related party, things get more closely scrutinized. Okay. Cost of a meal with a former client where there is no possibility of any future benefits from relations with that client. Okay. So this does not have a business purpose. All right. So if it does not have a business purpose, then it cannot be ordinary and necessary and reasonable in amount. Okay. So in this situation, D is correct. All of these choices are likely to be unreasonable in amount. Okay. All right, number 5. Which of the following is a true statement? Interest expense is not deductible if the loan is used to purchase municipal bonds. Okay, is that a true statement? Yes, we know that is a true statement. Insurance premiums are not deductible if paid for key employee life insurance. We also know that that is true. 1/2 of the cost of business meals is not deductible. We also know that that is true. So then that leads us to D. All of these choices are true. Okay. Let's look at number 6. All right. Paris operates a talent agency as a sole proprietorship, and this year she incurred the following expenses in operating her talent agency. What is the total deductible amount of these expenditures? All right, and so let's tick these off and take a look at each of the expenditures. Okay, so we've got $1,000 tickets to the Super Bowl. No business was discussed. All right, so are those a business expense? And the answer is no. Those are not a business expense. A $500 lunch with her sister Nikki. Is that a business expense? No, it is not a business expense. $700 business dinner with a client, but Paris forgot to keep any records. Well, guess what? No records, no deduction. All right, so that is also not going to qualify now as a business expense. It would have had she kept records, right? It would have been 50% deductible. $900 tickets to the opera with a client following a business meeting. Okay, what do we know about this one? Was there a business purpose? Yes, there was in fact a business purpose here. However, as of 2017, as part of the Tax Cuts and Jobs Act, entertainment is not deductible. Meals are 50% deductible. Entertainment is not deductible at all. So in this situation, her deductible business expenses are 0. Okay? I think that's the last one on that page. Oops. All right, let's take a look at number 7. All right, number 7. This year, Clark leased a car to drive between his office and various work sites. Clark carefully recorded that he drove 23,000 miles this year. Let's highlight some important information here. 23,000 miles this year. Actually, I would rather have that in yellow than pink. And paid $7,200 in operating expenses, and we're told that that's gas, oil, and repairs, along with lease payments. What amount of these expenses can he deduct as a business expense? Okay, so he drove a car to drive between his office and various work sites, all right? Not, okay, so between his office and various work sites, all right? Not the same as driving between home and office, all right? So driving between home and office is not deductible, but he drove between office and various work sites. So in that situation, he does get to deduct his expenses, and he in fact gets to deduct all of those expenses related to his operating of that vehicle. And so he's got these $7,200 of operating expenses, and so he can deduct those. He could alternately deduct the standard mileage. There is a standard mileage offered by the IRS, and he could deduct the standard per cents mileage, right? Or yeah, cents per mile mileage for that vehicle instead of those operating expenses. All right, so now let's look at number 8, and we've got Shelley. And Shelley is self-employed in Texas and recently attended a 2-day business conference in New Jersey. After the conference, she had dinner with an old friend who lived nearby. She documented her expenditures, and so we were asked, what can she deduct? All right, so her deduction equals, all right, so airfare to get there. Yes, she absolutely can deduct that $2,000 airfare. Meals at the conference. Well, remember, meals are 50% deductible. Oops. So she can deduct 50% of those meals. Meal with an old friend. She does not get to deduct meal with an old friend. Lodging in New Jersey. Yes, she can absolutely deduct her hotel or an Airbnb, what have you. Rental car. Yes, she does in fact get to deduct her rental car. And when you total all of those up, you get $2,740. And so B is our correct answer. Okay, so that is number 8. And then let's go to the next slide. And what we'll do is we'll do number 9 on this video, and then I'll do the next 9 on a second video so the video doesn't get too long. All right, so number 9. Ronald is a cash basis taxpayer who made the following expenditures this year. Which expenditure is completely deductible in this period as a business expense? So a couple of things here. Completely deductible in the current period as a business expense. Okay. All right. So what have we got? We've got rent, which covers the next 24 months. We've got $3,000 for a new watch for the mayor to keep good relations with the city hall. We've got $2,500 for professional hockey tickets distributed to a customer to generate goodwill for his business. We have $55 to collect an accounts receivable from a customer who has failed to pay for services rendered. And then we have our favorite option. None of these choices is completely deductible. Okay, let's look first at the rent. All right, what do we know about this rent? Well, this rent covers 24 months. Okay, so this rent is prepaid, so it must be recognized ratably or essentially amortized. Okay, that watch, right? $3,000 for a new watch for the mayor to keep good relations with the city hall. Well, what do we call that? We call that a bribe. Bribes are against public policy, and so bribes are not deductible. Okay. We've got $2,500 professional hockey tickets distributed to a customer to generate goodwill for his business. Okay. We could look at C as either a gift or a bribe. All right. If it's a gift, remember this $2,500 is too large. So if it's a gift, it's too large to be deductible. If it's a bribe, it's never deductible. Okay. And then we have this $55 to collect an accounts receivable from a customer. All right. So if you are a cash basis customer or a taxpayer, okay, if you are a cash method taxpayer, you cannot deduct bad debts. However, you can deduct amounts paid to collect those receivables. All right, so let me write that down. Okay, so since those expenses required to collect those bad debts are deductible, our answer is D. All right, and I'm going to stop the recording here. I'll pick up the next recording with number 10.